Hey guys, welcome to this week's episode. I'm Pav, lead market analyst here at Swyftx, and we're here back to talk about all things markets in what's been a pretty well-performing week. We did see some of the geopolitical tensions out there start to go over, a bit of an escalation abroad, which we won't dive in too much to today. But overall, it's got us thinking, what's going on here? We have seen a lot of these crypto assets start to perform quite well. And that's what we had to discuss today. What headwinds or tailwinds have we got to look forward to heading into the back end of this week, as we do have the weekly close coming up first thing on Monday morning. But overall, we're seeing some top performers such as Hyperliquid, BNB Coin, Chainlink in the last 7 days, moving quite nicely. Even Bitcoin, 5% in the last 7 days. And the real story for me is, even since that Saturday, how we talked about with those geopolitical tensions boiling over, we have seen the total market cap as a whole up around the tune of about 8 to 9%, give or take, by the time you watch this. So, just thinking, what's going on? Why is there potentially a little bit of a release valve here? Now, there could be this overall theory that the markets were quite pessimistic already. There was potentially a lot of selling and downside protection already in the market. So what we are seeing is maybe some sort of relief rally. But what I wanted to dive into today was, again, what's ahead for us to look forward to. And if you did catch me in my last couple of squawks, we did talk about two main themes over the last few episodes. We've talked about jobs, we've talked about inflation, namely inflation. It has been coming down. It's becoming less and less of a policy issue, in my opinion. But what we are seeing potentially become more of a problem is the unemployment rate, and that could have then volatility impacts further on the crypto market as well. So what we have coming up at tonight, 11:30 p.m. on Friday, Australian Eastern Standard Time, we have the non-farm employment change coming out, so the amount of job changes month on month, as well as the official unemployment rate. So again, recommend going back and checking the previous issues of the squawk. You can check out my YouTube for previous videos. We talk about quite extensively how monetary policymakers, they're basically walking a tightrope, trying to balance two things, the employment and job rate and growth, as well as inflation. So when one becomes more of an issue than the other, they've got to steer in that direction. So we did see a revision last month, like we spoke about in this particular article, where they had over accounted for 862,000 jobs over in the US. So that's quite a bit of a stark difference compared to the numbers that were originally presented. But again, if we do see the current expectations, which are for unemployment rates to remain flat, but if we do see this rise, that could be some volatility that comes off the back of that, in my opinion. Now, that's one thing that we could look at heading into the end of this week that could drive some volatility. Again, not to point out the obvious and something we won't talk about too much. If we do see there's tensions abroad, geopolitically also start to flare, that could also provide additional volatility for the market to deal with as well, which so far it has held up quite well, but we wait to see how it's going to perform in the coming days and weeks. Now, on the topic again of the unemployment rate, I just wanted to showcase some of the other themes that we're seeing more currently in the market right now. There is a bit of a trend of tech companies in the US laying off staff as a result of the advancements and embracement of AI technology. If you yourself have checked out the new suite from Claude, it's quite capable. And there is this overall theme that we are seeing people like Jack Dorsey, co-founder of Twitter, mentioning that Block is about to lay off, or has laid off, started the process to lay off half its workforce because, again, it says here, quote, artificial intelligence has fundamentally changed what it means to run and build a company. It's a pretty interesting trend that if we do see that take off, these sort of leading market indicators that we're talking about, like unemployment rates, they could really start to be affected. So it was something that we're going to have to just watch really closely, if not now, the coming months ahead as well. Now, I also wanted to talk about, while we have seen the markets performing quite well right now, what are some of the other participants out there? How are they performing? How are they benchmarking? What's happening in the market right now? So I thought we'd look at the institutions. Let's look at the ETFs, the exchange-traded funds. So we've got here from So Value a chart that basically lines up both the ETH and Bitcoin spot net ETF flows. So this is after all the buying and selling. What is the net holdings of the assets? What we can see, as it did reach their peaks around that October or end of 2025 period, we have seen a subsequent drawdown in the total amount of Bitcoin and ETH held in ETF vehicles. And we are seeing this sort of curl up a little bit. So again, I think it is pretty premature to say this is definitely the bottom and we couldn't go lower when it comes to these sort of metrics. And if you're having trouble understanding what this means, ETFs, they tend to provide a more durable or more longer lasting, persistent, you could use is probably another word, buyer or seller in the market that generally is a little bit bigger. They are putting millions and millions of dollars in at the market on a daily basis at times, if not billions in a week. So these sort of trends, they can be quite important to watch when we think about an asset value, right? Because it's all about matching up of buyers and sellers. If there's more buyers than sellers, prices generally tend to bid higher. And again, what we've seen most recently, there has been a trend of sellers in the market, so we have seen price take that downside move as well. So I think the simple way to look at this and understand this is watching how the ETF market performs into the weekend for the next couple of weeks. It's going to give us a really good indication if we do potentially start to see a little bit of an absence of those sellers and maybe even a reintroduction of those buyers back into the space as well. But for now, where we stand today, it still seems like it's too early to call this a trend at all, but it is a very sharp rise compared to what we have been seeing. If you look at these columns, they're breaking down the net movements that are changing these lines. It has been very heavy on the downside. We're now starting to see the selling pressure decrease, and now we're starting to see the buying pressure increase. More in favor of Bitcoin than ETH. Again, these are trends that we'll be keeping a keen eye on. But that's it from me. If you have any questions, let us know in the comments below. We'll catch you guys next week. Thank you.